This section basically is to focus the section 1 and section 2, IGCSE accounting. I'm using the Edexcel accounting for your practice. So this Edexcel accounting similar to the IGCSE Cambridge. So basically you just need to use it as an additional material to practice. So let's restart the question. Identify which one is a liability. Liability is the owed to outsider. So which is that the business owed to the outsider. Liability is in the credit side. So we need to identify which one is in the credit side. Inventory is the goods unsold, which is our asset under the current asset. Other payable, this one we owe to supplier or the service provider. So this is our liability under the current liability. Other receivable is that, for example, the expenses that we pay in advance, rental in advance, we pay in advance. So this is the example of the other receivable. Petty cash is the cash that keep in a small amount. Identify the term used to describe an instruction to the bank to make a fixed payment. This is the instruction to the bank with a fixed payment to a supplier on the last day of every month. That means that the bank follow your instruction or makes a fixed amount. This one very useful for the renter. Okay, because every month is the same amount. So the bank will just auto transfer your money to the receiver. Check is a document, physical document that you give to the supplier when you make the payment. Credit transfer, this is a banking online. So normally credit transfer, we don't have a fixed amount. Whenever we want to do it, we just do the transfer. Direct debit, similar to this transaction, also instruction to the bank. But you are allowed the supplier take the money from your bank. This is supplier take money from your bank. And the amount can be different or can be the same, depending on what kind of payment that you make. Normally, like direct debit, we can use it to pay the mobile phone, the postpaid mobile phone. So this one, we use it based on the actual usage, then they will take our money. Standing order is a fixed amount, the rental that we use to do it. So standing order is an example in this question. Now, number 3, identify which account always have a credit balance. Credit balance, in the trial balance, we have debit and credit. So credit, we have liability, capital, and revenue, other income. Debit, we have asset, purchases or cost of sales, expenses, and the drawing. So carriage inward means that the cost or the transport cost that we incurred when we bring in the goods. This one is a cost of sales. Carriage outward is a cost that delivery cost or transport cost that we incurred when we send the goods. This one is transport cost. This also transport, both also transport cost. This one is in, this one is out. This is out to the customer. Whereas this in from the supplier. Both also have to pay. So both also in the debit side. Discount allowed is the discount that we give to the trade receivable or customer when they make payment. So this to the business is expenses. So expenses is in the debit side. Discount received, this is from the supplier, which is trade payable. So this amount is considered other income to the business. So that's why it's sitting in the credit side. So the answer is discount received. A trader sell 20 items at 8 each to credit customer less trade discount. Trade discount is to encourage the customer to buy more. The customer returned 5 items. The customer bought 20, now return 5. Identify which amount will be shown on the credit notes. Creditor is to refer to the goods returned. So when we bought 8 is for the each, and then less 10%. So when we return, then we also have to take 5 times $8 each, and then times 90%. And we are only calculating 90% because that this discount, trade discount is 10%. So that means trade discount, no accounting entry. Okay, so you don't need to do the recording. Just take the net amount to put into the account. So this is under the customer return. This is under the sales return account. So 5 times 8, 40. 40 times 90% is 36. So the amount is $36 that we need to keep. Question 8. A business maintain a petty cash book with a float of 300. This means that this is a impressed amount. During the month spent, so left with how much? 300 minus 185. So we left with the 115. So this is a balance CD. Identify the amount to restore. Restore means that because this is an impressed amount, floating is an impressed amount. So you need to top up how much in order to get back the 300. So basically you take 300 minus 115. So you get 185. You notice that it's an amount same that what we spent. So this is the amount that you need to top up. Okay, question. Here is a invoice. This is an invoice. Okay. So who is the seller? This is a seller. This is a buyer. Okay. Now, the item bought by 18 unit, 300. So the total cost is 5,004. Take this one times this one, 5,004. Trade discount 10% means that this one you times 10%. So you get 540. So the net amount that we're going to record in the book is 4,860. For this one, you don't need to do any recording until you make the payment. And this 5% is from here, not from here. So if the payment within 7 days, then you have to calculate 5% times 4,860, how much the discount allowed or discount received. Okay, here they given the information. They ask us to calculate the different amount. So let's put back the information first. Okay, 10%, and then the amount is 4,860. Calculate the amount paid if payment made on the 3rd. From the 1st to the 3rd, 3 days. So the customer can enjoy the discount 5%. So how much that need to pay? You take 860, and then you times straight away, because this is 5%. Actually, how much you need to pay? 95%. 100 minus 5, 95. So you will get 4,617. So this is the amount that we need to pay for the payment, the net amount, if we make payment less than 7 days. But another scenario is that when the payment is made after 7 days, the customer had to pay the full amount. So this full amount, 4,860. 60 because this is after 7 days. State the book of original entry used to record. Book of original entry, book of prime entry. So in Cambridge, we say book of prime entry. We have 7 books. We have 7 books. Sales journal, sales return journal, purchases journal, purchases return journal, general journal, cash book, and petty cash book. So write off the irrecoverable debt. This is something that non-recurring, not happen often. So we use the general journal. Something that you use always recurring, then you can set auto in the system if you are using computer system. So this is general journal. Sometimes we also call general journal as a nominal journal. So depend on you, you can choose either one. For the return of the goods from the credit customer, this one we sold goods. I mean, this is a sales. Okay, but return goods, sales return journal. Return goods to credit supplier. Supplier is a purchases. So return goods is a purchases return journal. Purchase by check. The moment you saw the check, this is under the cash book. Purchase on credit. This is on credit. This is on with the check. So credit means that general. You didn't pay, so you cannot put under cash book. This is under general journal because this is non-current asset. So take notes. If the payment made, cash book. If on credit, non-current asset, general journal. Bank loan. This is a liability, non-current liability. Liability is in the credit side. Carriage inward is a cost of sales. So cost of sales is in the debit side. Cash is an asset, so debit. Drawing reduce the capital, so this is in the debit side. Equipment cost is non-current asset 37860. But the provision for depreciation reduce the cost, so it will be sitting under the, this both is under the non-current asset. Equity is a capital, so credit. General expenses is expenses, debit. Inventory, this inventory is the beginning of the year, asset. Inventory is an asset. Purchases is a cost of sales in the debit side. Revenue is a revenue, so in the credit side. Trade payable, control, this is a trade payable, total trade payable, so credit. Trade receivable is a customer, is an asset. Wages, 6,000. So after you calculate all the total, okay, you realize that this amount cannot be balanced. This total is 205,452. But you notice that this amount lesser than the credit. So when we have this situation, we have to take the same amount, the bigger amount to record. And the differences is 5,693. This one we call suspend account. So when the account trial balance is not balanced, we will use a suspend account to balance off it. This is a temporary account. This one you're going to learn in the section 3. Why? Or state 2 reasons for offering the trade discount. Trade discount is to encourage to buy more. Okay. So one of the reasons is to encourage customer to buy more, or we call bulk purchases. Okay, this is the meaning of buy more. Or sometimes if you have a regular customer, you want to reward them. So you do reward royalty customer. customer who often come to you, then you reward them. Or sometimes you want to attract a new customer, so you can also give the trade discount to get new customer. Okay. Now, stick to reason why a credit customer account may have a credit balance. So this one, which is that customer is a trade receivable. Trade receivable by right should be in the debit side balance BD. But sometimes it may have this situation, which is in the credit balance. In what situation that it could happen? Let's example, the customer fully pay us. Suddenly, they return the goods. So that this situation, we will have a credit balance. We are owing money to the customer. Okay? So this situation happens when the goods return after full payment made. Okay. Other than that, what else? Sometimes when we told the customer, we will give them the discount. Let's say the customer owing us 100. Okay. Then we told them that we will give them the discount. So actually, they are more. Give us extra $5. So this $5, it will give the balance CD. For example, my bank, okay, I should record 95. Okay. Then here, bank receive is actually is 100. So, but we should give another discount, but customer forgotten. Customer pay us 100. But they supposed to have one discount allowed $5 because pay earlier to us. Since that we already collected this money, so no choice. In this case, the discount allowed we record first. And at the same time, if we didn't pay back this $5 in within the month, then we will have a balance CD here, $5. So this will cause the balance BD in the credit side. So which is example in here is when there is a overpayment made by customer. Okay. Okay, the next one. Okay. Here, maintain a full set of accounting book and offer credit customer a 5% trade discount and on order over 1,000. During the January, the following transaction took place between Kiel and the Bella. Okay, this is all the transaction date. They want us to record the Bella account. So let me open the two screen. Okay, let us record the transaction one by one. So here, January 2, they say that check received 3,005 in full settlement of the account balance on. So that means there is an opening balance 3720. So 2023, January 1st, balance brought down, which is the amount is 3720. And this payment received from Bella. So in here, January to bank, because check, when you saw the word check, this is a bank. And the amount is 3,500. Because they say it's a full settlement, means that there is a discount allowed. Okay, take this minus this, we get 220. So the discount allowed is 220. Next is that sold goods list price. They say that he offered the credit customer 5% trade discount. No trade discount because the amount condition set more than 1,000. This is less than 1,000. So in this case, we have to put 880. Okay, so be careful with the term condition. Return goods sold online. So this one, return goods. Since that I didn't get when we sold goods, we didn't give discount. When they return, also return the total amount. So on the 17th, so this is a sales return, 170. Okay. On 28, this time, because this is more than 1,000, then we have to calculate what is the after the discount. So 1,003 times 95%. So we get 1,235. So this with the discount sales. So now we calculate what is the total, subtotal. And January 31st is the last day. So balance CD. And the amount total for this debit side is 5835. Total 5835. So take 5835 minus these three amount, you will get the balance CD 1945. So 1945 balance CD, balance BD must complete one set. So this one credit, this side will be in the debit. So your this February 1st balance BD. Okay, the next question is that state the two benefit of using accounting software. This question is applicable to those candidates sitting the exam 2027. Okay, so take note for this one. State two benefit. First, accounting software is fast. The speed of the processing fast. Okay. And then you can accumulate a lot of data. I mean, the database is huge. So you can keep into one laptop. With just one laptop, you can collect many years account. Okay. And it's also because of the if this all the data huge, it will improve the efficiency of the stuff. Or it also help more accurate. How to be more accurate? Because when we set the program of the accounting software, we will do the testing. Make sure there is no short of one debit or one credit. Everything must be in control set. Okay, this is example for the benefit using the accounting software. This apply to the 2027 candidate, the exam. State two method of protecting data when using accounting software. One of it, we always have the firewall. So when you go to your laptop, they will already set up the firewall. Make sure that no one can easily hack your computer. Some, they might buy the antivirus software. So this one, you have to pay. Okay, other than that, all the accounting staff or the user of the accounting software, they will give a password. Only you know what is the password to log into your accounting or your access. So that is the benefit. Okay, question 16. Karen maintained 3 columns of the cash book. So this is all the transaction given, bank, overdrawn, cash, and so on. The following transaction took place. Okay, let's see what we're going to do. I need to open 2 screens so that we can practice. So, okay, those transaction in here. Okay, the first question, they say that they have beginning month, March. Bank is overdrawn. When this is overdrawn in the credit side, balance BD. Bank 1726. Okay. Another is that cash. Cash must be in the debit only. March 1st. Balance BD. Okay. Cash 350. Okay. The next is that when you do this style account, try to be in sequence so that you won't overlook one or two questions. March 1st, sold goods for cash. When you sold good, that means you receive money. Okay, so this is first sales. Sold goods is a sales. In the cash column, 490. Receive notice from the bank that a check received from Undo 350 has been dishonored. Dishonored when you receive, you debit. Now the check, the bank rejected. So we have to return back to R2. So this is a check amount, that means under the bank, 350. Pays SW electricity, standing order is a bank transaction. You saw the word pay, that means this is under the credit side, SW electric. Under the bank, 190. Whereas receive a credit transfer, that means you receive money from Jewel. So this one is on 11. From who? From Jewel. And the bank amount, credit transfer amount is, bank is 878. This 878 compare with the total 950. That means we get the discount allowed. Discount, okay? This one discount allowed is 72. 950 minus 875. 878. Bank cash means that bank receive money, cash giving out money. So this one we call contra entry. So this one here, 20th, bank receive money. So your detail you have to write cash. Okay, in the bank column is 440. Whereas in the credit side, cash is the one giving out to the bank. So in the cash column, 440, give to the bank. So your detail in the credit side is the bank. Next is that pay Zealand 686 by check, full settlement of after taking 2%. So this amount, we pay how much by check? 686. So that means 686 amount here. And this one, 26. Pay to who? Pay to Zealand. And full settlement after taking 2%. That means that this 686 actually is 98% on it. We need to calculate the discount. So the discount is 14. So this is how we get this 14. Okay. Now next is that pay wages by cash. So wages paid 27 wages. Okay, this amount by cash 100. Pay bank charge on 29 bank charge. Okay, so pay bank charge $8. So now we have to calculate the total for the debit and credit. So we don't know the bank is which side, so we just leave one empty first so that we can put in the balance CD. Okay, leave a space for it. So in here, we have 72. Cash must be in the debit side, 840. So take the 840 minus 440 minus 100. So we left with 300. This 300 we call balance CD. Okay, so the total 840. Whereas here, 14. Discount no need to be the same, the subtotal. But cash and bank must be the same, the subtotal. So sounds that from the account bank credit is more. So the total is 2960. In this case, we will expect the balance CD for the bank in the debit side. So this one 2960. Take 2960 minus these two amount, then you will get 1642. So the balances CD, BD is here. April 1st, balance BD. In the bank column, 1642. Whereas this cash 300 put into here. April 1st, balance BD 300. So this is how we prepare the cash book.